SVB, or Silicon Valley Bank, fell to new lows just above $39 on March 9, 2023. To put this loss into perspective, shares at open of March 9th were $265 each, resulting in a downward spike of $226 per share in a single day. But what happened? Founded in 1983 by Bill Biggerstaff and Robert Medeiros, Silicon Valley Bank would become the 16th largest bank in the United States. Conceptually conceived during a poker game, Medeiros and Biggerstaff aimed to create a financial institution venture capitalist financed business. Opening their first office on North First Street in San Jose, over half of SVB's initial business was brokered through lucrative real estate loans. 3 years after opening, SVB would merge with National Intercity Bancorp in 1986 and open a secondary hub in Santa Clara. In 1988, SVB aimed to become a publicly traded company, even raising $6 million during its initial public offering, or IPO. Come 1990, SVB would begin servicing the East Coast as well through a new office near Boston. The mid-1990s would prove troubling for Silicon Valley Bank as the California real estate market was experiencing a severe downturn. During this time, SVB would not only acquire a winery lending business, the company would also see John Dean take over as CEO, a position that had been held by Roger Smith since the founding of Silicon Valley Bank. The dot-com bubble that began expanding in 1995 provided a multitude of new opportunities for a plethora of venture capitalists, in turn benefiting SVB indirectly. Throughout the early internet age, Silicon Valley Bank was well known for lending capital to companies that were not yet in the realm of profitability. And in 1995 alone, SVB would acquire approximately 2,000 clients, including the now tech giant Cisco Systems. Under the leadership of John Dean, the bank would expand throughout the country, eventually moving its primary headquarters from its original San Jose office to Santa Clara. And with the turn of the century, Ken Wilcox became SVB's newest CEO. Wilcox would, however, maintain focus on his predecessor's path and continue down the route of technology investments. In 2004, with almost 2 decades of venture capitalist and investment firm relationship under its belt, SVB took the leap to international expansion, opening hubs in Bangalore, London, Beijing, and Israel. By 2015, Silicon Valley Bank accounted for the funding of up to 65% of all U.S. startup companies. It was also known as the only financial institution to show support for cryptocurrency, controversially so, I might add. Between March of 2020 and March 2021, Silicon Valley Bank deposits would double from $62 billion to $124 billion. The majority of these deposits were placed in long-term bond investments. However, as inflation spiked alongside interest rates between 2021 and 23, these bonds would fall in value drastically. As of the new year 2023, SVB was holding $15 billion in unrealized losses due to these long-term investments. Simultaneously, startup companies across the nation began to withdraw their personal funds as COVID and the sinking financial situation of the country grew. These smaller businesses needed cash on hand to continue basic day-to-day operations. To cover these withdrawals and maintain compliance, Silicon Valley Bank would liquidate all held securities they had access to, realizing another instant $1.8 billion in losses. March 8, 2023. Silicon Valley Bank announces an emergency sale of its own stock to raise $2.25 billion. This is only to pad a $15 billion loan it had just taken out and $21 billion of its own investments it had sold. In addition to these massive liquidations and loans, Moody's Investors Service would downgrade SVB's credit rating. These would be the catalyst as venture capitalists and portfolio managers across the nation would begin withdrawing their funds from SVB in mass. On March 9th, customers would withdraw $42 billion in a single day, leaving Silicon Valley Bank with a cash balance almost $1 billion in the red. Shares coincidentally began to plummet as a fire sale spawned insurmountable panic in shareholders. The California Department of Financial Protection and Innovation would actually seize control over Silicon Valley Bank 24 hours later on March 10th, citing insolvency and insufficient liquidity. This collapse is the second largest bank failure in history, following only the 2008 financial crisis. Tremors from SVB are being felt throughout the entire market, reaching far beyond private investors. Major companies such as Roku exclaimed that nearly a quarter of all the company's cash reserves were held by Silicon Valley Bank. And corporations such as Roblox, Vimeo, and Circle are also tremendously impacted by this event. However, the exact numbers are not currently known. Many also fear of the impact this will have on digital currency as well, as the aforementioned Circle is the creator of USD coin, a stablecoin known as USDC. Regulators say that current unrealized losses by US banks total over $620 billion, leaving many investors very wary.